Hey everyone, Anthony Venuta here with Untitled Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in for another episode. On this episode, we're going to be talking about the tsunami of notifications going out to hundreds of thousands of Canadians that have a static or fixed rate variable mortgage. You don't want to miss it. Stay tuned. Hundreds of thousands of Canadians who have a static or fixed rate variable product have now hit their trigger rate, and a tsunami of letters and calls and emails potentially are going out to hundreds of thousands of Canadians, letting them know that their mortgage might not be covering the interest portion of their mortgage and little going towards principal. Now, this is something that we've extensively covered on this channel, but I think it is very important to see exactly what is happening now. And basically, for Canadians who may not even still be aware that this has happened to them, it's going to be an eye-opening experience for millions of Canadians as we anticipate the Bank of Canada increasing interest rates into October and December and possibly into 2023. So if you're one of these many Canadians who received a notice from your lender, you might open up that letter or get that communication noting that your mortgage might be in a negative amortization. That means maybe you signed up for a 25-year amortization, but now you're at 50 years to pay off this mortgage because for the last few months, the payments that you've been making, less and less was going towards principal and more was going towards covering that interest. And now, with the recent increase on September 7th by the Bank of Canada, an additional 75 basis points, that may mean that all your payment or the majority of your payment is only covering the interest and nothing is going towards the principal. Hence the reason why your amortization has now increased beyond its threshold of what you agreed on when you originated that mortgage. Now in Canada, the maximum amortization that you can have on any product is 30 years. So we'll let that sink in for a moment. If you're seeing your amortization over 50 years, that is a major problem for many Canadians. Now, obviously, understanding what they can do next and what they should be doing in order to help bring that back into line is a question based on finances and what you can do with your mortgage and depending on your lender. So for many Canadians who have reached out to their branch or reached out to their lender or even to us here at Untitled Mortgage Solutions, we are trying to provide them with the best advice we can, especially because a lot of them don't even know that they have this trigger rate product. And talking to some consumers over the past few months, understanding when we issue a mortgage, especially if it's with a lender that has that type of product, we disclose that information, and talking to some of the clients that are coming in and reaching out to us that we didn't originate their mortgage for, but are asking the same question. I asked them, have you or were you explained the trigger rate? And for many of them, it was either no, they were never explained the trigger rate, or two, they were explained it, but they were saying, don't worry about it. It's never happened in the history that we've known at the bank. But it's always important that they understand, you understand as a viewer, all the contract and everything in that mortgage document. Now, for many of these products, you were issued that trigger rate, not necessarily in the documentation you may have signed at the branch or with the broker, but shortly thereafter in the mail. So for many Canadians, maybe they threw it out, maybe they put it away, maybe it's in a box somewhere in your attic. But it's important to understand that trigger rate. And if you can't find that documentation, there are a few ways that you can find out that information. A few months ago, we did a video talking about the trigger rate, but I think now is a good time, and we'll talk about the app and how it can help you determine your trigger rate and some of the calculations that you can do in order to help prepare yourself moving forward. But generally, with these types of products, what you should be doing is increasing your mortgage payments. That is the number one thing that you should be doing if you can, obviously increasing them to the maximum amount. The other option is putting in a lump sum of money. So if you have some cash sitting around, they will advise you that you can take advantage of your prepayment privileges. One piece of advice that we're giving our clients is if they're on a monthly structure of payment frequencies per month, maybe move that to accelerated weekly or bi-weekly in order to get more payments and more frequency through so that you actually forcefully make 1 or 2 extra payments per year. Although that might not be a huge savings and it might not move that trigger needle further down the road, it is something to take advantage of. The other option, locking into a fixed rate mortgage. And the lenders are going to basically push this for many Canadians. and understanding what that means, especially if you're panicking, you're seeing your amortization hit 50 years, you might be inclined just to lock in right away. Before you do that, obviously we're not steering anyone in either or direction. It's just understanding and taking a deep breath before you decide to lock in, to understand your journey with that mortgage. Are you going to be planning to sell that home in the next few years? Are you comfortable locking it at a higher rate? And obviously understanding the penalties that come with that higher rate if interest rates come back down. How well do you deal with that? For many Canadians who are reaching out saying, I wish I would have locked in a few months ago, and now they might be deciding to lock in, and then maybe in a few months from now, maybe, just maybe, interest rates may come back down depending on what happens in the economy. But obviously we can't deal with what could happen. You have to deal with what is happening now and your finances. So locking into a fixed rate mortgage might be an option, but with the 1 to 3 year products, those fixed rates for 1 to 3 year, generally they were more attractive. So clients were leaning on those products to give them that buffer to say, hey, I'm okay for 1 to 2 years. My mortgage might come up for renewal in that time frame, and then we can look at renegotiating. But right now, those 1 to 3 year products have increased significantly, anywhere from 15 to 27, 29 basis points, pretty much on par with most products when it comes to your 5-year traditional mortgage. So that is an important concept, because I believe that a lot of banks are now looking at these products saying, hey, everything's aligned. Maybe now is a good time to redo your entire mortgage or re-lock in for 5 years. You might find yourself 2 years in with an option to renew your mortgage for 5 years at a higher rate, and understanding the penalties that go along with that, especially if you want to pull out money, restructure, refinance. Now, not a lot of people, maybe not everyone wants to refinance, but obviously with the current situation, many Canadians might find themselves leaning on a little bit more of credit cards and lines of credits in order to make it through these next few months. And if that debt increases, and hopefully home prices continue to stabilize or potentially level off, you might want to consider restructuring that mortgage to pay off those higher debts in the future. And in order to do that, you may need to break that mortgage, and you might be paying a significant penalty. Now, another option that banks may be considering if you're approaching renewal, and a discussion that's being had sort of in the marketplace, is that when clients hit their renewal point, they may be able to re-amortize either back down to 30 years or up to 30 years, depending on their qualification, to help those payments and keep those mortgages back on track. And we will keep you informed, our viewers, when these changes sort of come in, or what we're finding or hearing from our lenders as the time passes. So if you do like that type of content and you want to stay informed about things that are happening with lenders and mortgages and amortization, make sure you hit the like, share, and subscribe button. Don't forget to hit that notification bell so you can get notified every time we post a new video. So now we've talked a little about what you can do. You can increase your payments, add a lump sum, fix that mortgage. Potentially down the road, you may be able to re-amortize that mortgage back up or back down to 30 years or stay within the window. Maybe we'll see the Bank of Canada, OSFI, the regulators change that stress test rule. We might see some changes come through the pipeline as the housing crisis deepens and the finance crisis with inflation continues to hit all-time highs. But we'll keep you posted on that. Now, I want to take a second and dive into our app. For those Canadians and those viewers that are watching and maybe asking themselves, I don't know my trigger rate. I want to find out, what I should be paying. And if I increase my payments, what will my trigger rate move to? And what will my amortization look like if the entire mortgage amount is paying as interest versus principal and interest? So obviously, if you're paying an interest-only payment, that means nothing's going towards principal, which is what's happening with these trigger rates. If your interest portion or your payment is all covering interest, nothing's going towards principal, that means your amortization is just ticking up and up and up. So taking the opportunity, I'm gonna grab my phone and we're gonna basically look at the app together. So what I wanna do is just basically click on the app. I want you to open the app. You're gonna see our information come up. You're gonna hit on Simple Mortgage Calculator. Once you do that, it's gonna give you the opportunity to say, what would you like to calculate? Monthly mortgage payment, interest rate, amortization. We're gonna click on mortgage payment to set the baseline. At this point, you can basically look at your interest rate to find out what your interest rate is or was on your contract. Let's say it's 2.45%. You're gonna click on that. Now there's a couple more steps. Make sure that you click on variable, 5-year and 4-year mortgage, depending on how it's compounded. Majority of mortgages may be monthly or semi-annually. So for example, this one was semi-annually. Now we're gonna set the amortization for this mortgage as where it was started at 30 years. And once we do that, we're going to enter the mortgage amount of, let's say, $600,000. So we enter the $600,000, and now basically it gives you the monthly payment and your trigger rate of 4.70%. That is basically where this particular scenario would set the trigger rate. Now there's another way to do it. You can also look at the interest rate, and you can reverse engineer it and look at what your interest payment will do to your amortization. So if you click on interest only as opposed to mortgage, you will see that the interest rate obviously jumps to 4.7. That is the trigger rate, 4.7026%. And what you will see is if you click on the amortization option next, you will notice that that amortization jumps to over 50 years, as that's where it stops on the app. Now, obviously you can have some fun with this app. You can sort of look at some of those options for you and understanding what your payments should look like or what you should do. In those particular examples, if you see your payment is at X, you may want to increase it to where the actual interest rate may be at the current time. So, for example, if prime right now is at 5.45%, and let's say you had a discount of 1%, that means your interest rate is 4.45%. What you should do is look at that payment as of that amount, as opposed to what your rate was. In this particular example, we use 2.45. The spread between that, you might want to consider increasing your payment to that amount. And by doing that, it will actually change your trigger rate. So that's what I'm saying. You can have some fun with the app. Feel free to download it in the description box below, and you can basically play along and actually run some scenarios. But more importantly, with this type of content, especially for Canadians who are in or find themselves in the situation, maybe you're a homeowner, maybe you're a future first-time home buyer, and you're looking to better understand products, obviously reaching out to a mortgage professional, getting that advice is always a value add to you, as there is no cost to deal with a mortgage broker. And on top of it is sharing this content with many Canadians so that they are going to be aware that their trigger rate mortgage may be impacted maybe today or maybe in the future. So do us a favor, don't forget to hit the share, like, and subscribe button. If you know someone that could benefit from this content, don't forget to share it. And we'll leave the video here. We're hoping everyone got some information out of this. And if you have any questions, you can always feel free to reach out to us here at In Touch Mortgage Solutions, and we'll be happy to help. But until next week, have a great Friday and even better weekend, and thanks for watching.